All right, Kettle Range Theory Trader back with you with another video talking about a deep study on the momentum trade, the daily average true range in CRT. So let's not waste time to get right into it. So the average true range, what is it and how can it help with candle range theory? The average true range is just the average size of recent price moves. It could be in pips, points, or dollars. Even though I trade Forex, it can be applied to any market. And all we're looking for is above average true range candles on the daily chart. For example, if a pair moves an average of 50 pips and one day it moves 75 pips, that's above average. Okay, so that's the price action we're going to be focusing on. And we use that as an indication of possible exhaustion for a pullback or even a reversal. Doesn't matter which one, we just want to see a retrace against the big spike up in price. Okay, so the thing is that we don't take these candles at random, and I'm going to show you the chart, so just be patient and I'll show you everything I'm talking about. So we're looking for ATR candles that break above the prior weekly high or below the prior week's low. Okay, from there, we look for a false breakout or the candle range theory to play out. Okay, so it's a process where it takes time. It could take a couple of days, even as I'm up to 3 days, sometimes up to 4 to pay out or play out rather. Okay, so we're going to look at that. So this is the pattern right here. Very simply illustrated. This is a crude drawing, and then I'll show you real chart examples. So let's just say this is a daily chart. This is day 1, day 2, day 3. The days don't matter. The main thing that we're looking at is step number 1. We want to be sure we are below the prior week's low. Price is already broken out of it. Next, we need to see price have an ATR candle, and I'll show you the indicator for this, below the prior week's low. Okay, so that's day 1. You let this whole day play out. And then between day 2 and 3, okay, day 2 could be, all of this could happen in one day or it could be a series of 2 days. But we look for the basic candle range theory pattern to play out. But the catch is that we're not trying to trade outside of the range. We want to catch the momentum from the range bottom up to either the middle of the range or the top of the range. So once again, our entry for the momentum trade, we have to let this trade prove itself that it has momentum to the upside to catch either the middle of this candle or the high of this candle. The safest bet is the middle, okay? Because these are going to be fairly big candles. So you should get at least 50 pips trading these, all right? So sometimes it can be more. I've gotten much more than that. This is a short example. Here we have day 1, day 2. Here's day 3. Big ATR candle above the prior week high, okay? Above the prior week high. Then we look for day 2 or 3 to go up a little more, have a false breakout above the range's high, and then show momentum to the downside. It needs to break the high of this candle range and stay inside of it, ideally. Okay. Our entry is below the range, and we look for price to take profit in the middle of the range or either at the range bottom. Okay, that's how that goes. Let me turn down this indicator here, or this my notifications on my phone. Sorry about that. Now here's the deal. Here's a real example from a real chart. Like I said, I'll show you this indicator. Okay. First thing I look for if I want to trade this is where is price in relation to the prior week high? It takes 2 seconds to see because I'm looking for an ATR candle below the prior week low. Okay. If I said high, I meant low. Okay. So this is a long example. So there's my ATR candle. Here's day 2. Price opened, went down, came up. Okay. Closed inside. And then the next day it went above the middle of the range. This is right here. This is the whole thing right here, though. Okay, the safest take profit is the middle of this blue candle. This is the ATR candle. So remember I said, why is this candle blue? Because it was above the average true range. So if the average true range for this candle was say 100 and it went 200 pips in one day, then we look for a retrace because it's already below the prior week low. We're just looking for a pullback and that's it. Okay. So here's the entry, how that looks on the 5-minute chart of this daily candle right here. Okay, so see how this price spikes down, consolidates a little bit, and then spikes right back up. Your entry could be, around the range right there, roughly, either here or right there. This is a 5-minute chart. Okay, but it spikes down, comes right back up, and then the momentum plays out. And this was a 1 to 5 because this was a 10 pip stop loss. All right, so this is this right here. All right, this spike down, spike up. Okay, but again, we capitalize on the momentum. We are not trading down here. Price must close ideally above this range, but sometimes you just play it by ear, close enough to the range. But again, not down here. It has to prove that it's already on its way. Okay, going up. All right, so here's the decision flow. Step number 1, when you come to the chart, is there an ATR candle above or below the prior week's high or low? Okay, and I'll show you how to set your chart up for that. Now you want to mark the high and low of that candle. This candle right here, mark the high, mark the low, and mark the middle. You can use a fib to do that, 50% of the fib. All right, that's the 50% level. Next, has price broken below or above the range candle and then close back inside of it on the 5-minute chart like it did right here. Did it break below it and then back inside of it? If it does, you enter. That's really it. Set your stop loss, take profit. Like I said, the safest bet is your take profit to be in the middle of the range. Okay. So you can try to go for the top of the range, but there's no guarantee it's going to get there. I would recommend you stick with the middle. So here's another example right here. So we have a blue ATR candle. It's below the prior week low, as noted right here. Price went outside the range, back inside the range, and then went up to the middle. Done deal. This was a 1-day trade, in and out. All right. This is the 5-minute chart of what I just showed you. Price broke below the range, chopped around a little bit, showed momentum to the upside. Sometimes it will consolidate around this level. Okay, it fools more shorts before eventually exploding outside of the range and it kept going. Okay, so that's the point on that. Let's see. Let's keep going here. So here's a short example where we have price that exploded outside of the prior week high. The prior week high was all the way down here, this black line. Okay, because this played out over 2 weeks. Okay, so this is day 1, which was Thursday, Friday, Monday, which was the trading day, and then Tuesday was the payday. Okay, because it didn't hit the prior range or the middle of the range until Tuesday. Okay, but we took the trade on Monday and then just let it play out because we're expecting straight drop. So here's how it looks on a 5-minute chart. Had some serious consolidation around the range high. You will see that. This is not uncommon. So sometimes when you get stopped out, just set a price alert, and whenever price closes back inside the range, get back in, control your risk, and take it again. Eventually, it did play out. It went for 70 pips. So if you lose, 10 pips here, maybe 15 pips here, eventually you fell into around 70 when it hit the middle of the range. So don't give up if you get stopped out. Keep your eye on the pair. All right, man. Here's one more short example. Here's the prior week high right here. ATR candles explodes above it, and then we got 1 day of action here where price spikes slightly above the range, closed back inside of it, and then tanked. All right, and that was that. So let's take a look. That was on Wednesday was the range day, and then Thursday was the trading day where price just went right back down. Basically, I was making railroad tracks. Beautiful price action where price barely poked above the prior day high, closed back inside the range. Could have entered somewhere around 1:10 a.m. Like I said, I strongly just recommend setting price alerts for these types of things. Don't watch the chart 24/7, and then price did tank. Fell 119 pips to the low of the day. So this went way beyond the middle of the range. It almost completed it. Like I said, the middle of the range is still the best bet, but will you see where it goes beyond the middle? Yes, you will. So you'll see both. All right, so let's set up the chart and find some real examples. So let's head on over to TradingView here. Let's see here. I'm actually in a real trade right now, but we'll get rid of that. Let's get rid of all of our drawings and indicators, and we'll reset the chart view. Okay. Now let's just go here. Matter of fact, I think one may be playing out right now. Yeah, right there. But let's just set it up. So let's go to a clean chart. Okay, so here we go. The first indicator you're going to find is the ATR candle indicator. All you do is type in ATR candle size. It's by this guy, Mikhail00. Okay, ATR candle size, and you will click that. It will go on your chart. I change the colors. You don't have to. You can do whatever you want. Okay, but what I do is I go to the gear icon and I click on style. For the, let's see, is it yellow? Yeah, I do yellow for the shorts, and then I do blue for the longs. There's no rhyme or reason to that. You can put whatever color you want. It doesn't matter. Okay, but there you go. That's how I do it. So on a regular chart, though, this would be a green candle and this would be a red candle. But these charts, or this setup, just shows that the ATR was exceeded. So here's how you read this indicator, though. On the bottom of the screen, and I'm going to have to change this color. Give me a second. I'm going to click the gear icon, click ATR, and then click black. And then other numbers should show. Yeah, there it is. Okay. So you'll see two sets of numbers right here, ATR and candle size. When you put the mouse over an ATR candle, you'll see how the first number says 51. I hope you can see this. Okay, the second number says 76. So the candle number is 76, which is bigger than the 51 pip ATR, average true range. Okay, so all that means is that this is bigger. This changes color because it's above average. All right, that's it. That's all that means. So if a candle does not change color, that means it's below the ATR. It's below the average true range. See, like right here, this candle right here, this red candle. Let me move this down a little bit. Okay, this red candle right here where the mouse is over was 46 pips from body top to body close. Okay, so that's below average. This one here, this blue one, was 98 pips long, but the average is 54. So that's it. But again, it's not enough for the candle to be red or yellow. I'm sorry, or yellow or blue. It has to be in the right context of the market, meaning that we like to see it above the prior week high or below the prior week low. So what we do now is only other indicator we need is mark levels. So you're just going to search in mark levels by Mark Tools. This is my favorite indicator, only because it shows just where price levels are. That's all. So I like to just darken it up. For the settings, though, you will need. I check the equal highs, equal lows. I don't care about that. You don't need the month. You will need the previous week checked. And if you want to do lower and higher day, you can, or current high, lower day, you can. But the main thing is that you need to have the previous week checked for the week. And you just leave it at that. You really don't need the day. We'll take that off. Okay, and we'll do it like that. And oh yeah, let me darken it up a little bit. Just so it's more visible. I do like for the style to be 100% opacity. And I think I put that up to like 2, just so I can see the lines a little more clearly. You could extend the bars out if you want. That's up to you. All right, let's make sure we're tracking here. Okay, so we got prior week high, prior week low. And we got our ATR candle. So yeah, if I miss something, I'll go through it. So now let's find a couple real examples. Because what I do is I just use the replay option. So whenever I see a blue candle, let's say this one right here. Start anew. We'll go here. All right, so this one right here, it's starting to fit my criteria because let's compare this to the decision flow. I'm going to go, real slow here. Very simple though. Is there an ATR candle, in this case, below the prior week low? Let me go back to my chart. Yes, this is the prior week low. This is the blue candle that's below it. What's my next step? Mark the high and the low in the middle. So I'm going to do that now. I mark the high. I mark the low. And the middle. To mark the middle, I'll just use a fib. It's 50%. There you go. That's my take profit level. Now, go back to the decision flow. Now, the next day, does price go below this low, which is the prior low of day, and then close back inside of it on the 5-minute chart? Now, I'll just go ahead and fast forward on the daily to see if it does that. If it doesn't, there's just no trade. This just gives you the signal that it's something to look at, but it doesn't guarantee there'll be a trade the next day. There was no trade here. Price broke out the range, and as far as we could tell, it did not come back up. Null and void. Okay, so I'm done with that one. Okay, if you want to give it an extra day to see if it'll come back, you can. But, I'd like to see it pretty much one day after. So you can give it 2. But as you can see, price pretty much just kept dropping. There wasn't much of a trade here. All right, so let's get rid of that. Let me go back to my indicator here. There we go. And then be sure to save the template as well. Once you get all the indicators on there, save the template. Let's go here. All right, so okay, this might be one. Well, I doubt it worked out, but let's try. Let's give it a shot. Because I don't think this blue candle is below the prior week low. I lost it just that fast. This was Thursday. Yeah, I don't think that was one. Let me try to find another one that worked out. This might be one. Okay, I don't see my mark levels, so hold on. Okay, there they go. All right, so I see an ATR candle. Perfect. All right, is it above the prior week high? Its mark level says that it is. Great. Okay, and actually we already have the answer to this because we see it did play out. So let's just see our entry. So once again, ATR candle right here above the prior week high. This was on Wednesday. So Thursday, we're looking for price to go down to the middle of the range, ideally. Okay, so we'll mark the high and we'll mark the middle. I'm not going to mark the lows anymore, only because of the fact that I'm just only trading the I'm only trading to the middle. I don't want to need to see the range completed. Okay, now that I'm done with that, I'm going to hide that just for the sake of ease of sight and use, and see the best entry. So the best entry when price closed back inside the range was at, it was right here. This was at 1:50 a.m. Right there. Okay. Let's see. To the middle of the range was right here. That purple line, that's the middle of the range. So something like that would have been good for, let's do like a 15 pip stop loss or so, 13. That would have been good for like 1 to 5 for the 15 pip stop loss and take profit at the middle of the range. All right. So there's one. I may have one. We may be in luck to see one play out right now in real time. I got a price alert for it, so I'll take a look. So let's see here. We'll go back to our ATR. So yeah, I mean, here we go. We got one right here live and in person. So you'll get to see me do a rare live trade. I don't really trade live because I don't care to. And I take the entries on my phone, so you won't see me do it anyway. But I'm gonna go ahead and see if this will play out. Let's see here. So let me mark the highs and lows real quick. Get the ATR candle indicator back up there. There we go. Yellow candle above prior week high. I'm just going to mark the high here. You see prices already closed back inside of it. So you see this is live right now. This is Euro Pound right now, like as I speak. Okay, so let's see here. I'll mark the middle right there. Drop down to the 5 minute. I'm going to get rid of my ATR candle size indicator because I don't need it anymore. Okay, I'm not sure where that came from, but anyway. All right, so let's see what we got. Our best entry would have been back here. Okay, price closed inside the range at 12.20 or so. But it is retracing a little bit. So I'll take a short here. I think I can get away with a 10 pip stop loss. I'm going to go ahead and put that in real quick on my phone. But you see how that played out. I mean, it's the same thing over and over. Once you see it, it's kind of hard to miss. So it just is what it is. But you know what? Let me see. We'll keep an eye on that one. I'm going to let my pound dollar trade play out. But this would have been a trade here. But I'm in pound dollar as well. And I thought that one stopped out, but it did not. So I'm going to leave that going. But this one right here is a trade live and example for a short. Let me go back out one more time. So again, but it's the same process, guys, over and over. Don't complicate it. Okay, don't complicate it. There's no indicators that need to be added. This is the whole thing. I'm giving you step by step. Okay, you're just, again, momentum. All you want to see, let me get rid of this. All you want to see is momentum from the high down to the middle of the range. And if we take this, or if we took it, it could possibly pay out. Let me see what the risk reward could be on a short. Best payout would be below the line, but if we targeted this line right here, you could possibly get 1 to 3 and scale in, all that good stuff, and get 1 to 3 across a few positions. So that's not beyond the realm of impossibility. All right, so let me try to find a long example, and then I will wrap this up. So let me get rid of my drawings. I'm just spitballing here. So let's see. Pound CAD. Look for blue candle. Okay. No. Okay, this one may be one. Again, hindsight's, we have the benefit of hindsight here, obviously. But the beauty of backtesting, I don't believe in spending hours and hours of backtesting. It's really just to train your mind to see the pattern, to recognize it in real time, like we just did, like you just saw me do. Okay, so here's one right here. Here's a blue candle, but I need to see if it's below the prior week low. So we'll do our replay option, and I'm going to go right here. Okay, and it is. All right, so because we're long, I'm going to mark the prior week low here, and we'll mark the middle of the range with our fib like that. Now this one may have been a near miss, and it's up to you how strict you want to be, because sometimes, let me get rid of the ATR candle indicator. The momentum will start to pick up, but it may continue on through the next day. Because if I'm not mistaken, this one, yeah, this is at 4:50 p.m. Eastern Standard Time. That means the market's about to close. But here's where we're looking to get in right here. So let's just say hypothetically, we'll say, you know what? I believe that momentum could pick up, and I wanted to enter right here, believing that price may hit the middle of the range, which is up here. So we're looking for that's 107 pips. You know, I wouldn't need all 107, but again, you know, hey, you get what you can. Another optional would be also to target the prior high of day, which is right here. That would be good for 54 pips. So either way. So, but again, this is at 4:55. So this is right at market close. Now we had the benefit of hindsight because we did see the price rise. So as you can see there, price goes down. If the prior low of day stays intact, that's another key that it could go up as well. But it hit the low and then eventually came up. So that would have been a stop out, obviously. But then it did eventually come up right. Where was it? Okay, there it goes right there. So I don't encourage you to sit through all this drawdown. Okay, all of that is unnecessary. I would just take the loss. But right here, let's see. Let me go back out to, well, no, we'll keep this. From that entry, the entry point right here was good for up to the high of the day, about 46 pips. Okay, so you might have been a little early. If you want to give the range low time to get all this over with and then take it the next day, you can still set a price alert. The entry level does not change, but the market isn't going to do what you want it to do when you want it to do it. That's just not how it works. Okay, but this range was still valid if you wanted to stick with it because it was still below the prior week low. It just didn't do it on Wednesday. It did it on Thursday. It spiked again and made a new low and then came up. All right, so that still could have been good for 50 pips, but obviously you would have had to either been stopped out and stuck with it and say, you know what, I'm going to follow the pair and see if it comes back up, or just find another one. But you will see this whereby it's a close one, it creates a new low, it spikes this low, closes inside of that, and then goes up. But then as we see the next day, went up a little more, and it did eventually hit the middle of the range as well, right here. But this is more so in the swing trading territory. I'm not into that. It did hit it though, and that was good for, like we said, the 106 pips. But it just took a little time to get up there. It took a few days. It was from Thursday, this was Friday, and this was Monday. So it would have had to hold over the weekend as well. So, you know, up to you if that's how you want to do it. It's up to you. All right. So let's do one more long example and then we'll wrap this up because that one wasn't the best one. So we'll see if we can find something a little cleaner. Let's try Euro New Zealand. Okay, looking for the blue candles. Blue candles. Okay, this one may work. But again, step number one, see if we're below prior week low, which we are. All right, so that's awesome. Okay, so we got two actually. This one played out and this one paid out too. But I'm only gonna focus on this one. All right. So once again, our decision flow. Is there an ATR candle below the prior week low? Yes, there is. I'm gonna mark the low. This is the low. It's about establishing those zones of interest. Where do you want to see price go? And then where do you want your take profit to be? And where you want your stop loss to be? That's trading in a nutshell, period, point blank. Let's see. So that's it. So now we have it all mapped out. So I already know this is Thursday. So Friday, what we're looking for is price to go below the range, close inside of it, show momentum to the upside to get it to the middle of the range. And it already did it. So we have the benefit of hindsight. So let's take a look and see how it played out and where our entry time was. So let's see, where's that green line? Okay, so here's the low. This is Friday. So you had some near misses here. And you'll see this again. It's not uncommon for price to close inside, go back outside, close inside. Ideally, the low of the day should still hold no matter where it is. But there were a few fake outs here. You could have gotten long here. You may have gotten stopped out because price came back out, came back in. You could have got long here. You may have been stopped out here. But eventually, it did hit. So anywhere in here, really. Let's see, from here, if you set your stop loss wide enough, the safest stop loss is actually below the low of the day. I don't trade like that though, only because they're a little too big. And I like tight stop losses. So I deal with the stop outs because they're small. Okay, so the safest stop loss would have been about a 25 pip stop loss. And to take profit to the middle of the range, that would have been good for about 1 to 2. I don't like 1 to 2s though. That's just me, okay? You trade how you want, all right? I'm just talking about how I trade. I prefer things like this right here. And a stop loss below this swing low for 15, 12. But now you see my risk to reward is 4.4 instead of 1 to 2. Okay, on even let's say this candle's entry right here. Let me make this bigger so you can see it. And let me get rid of this so you can see it a little better. See how this candle right here closed inside the range again? Right there. That right there would be something I would like to do. And my stop loss will go below this low right here. This swing low. That would be my stop loss. So this is about, now I'll put the risk to reward back on there. It's about 17. If I'm feeling especially bold and I feel like it won't go back outside the range, I could put it down to 10. I really prefer 10s. 10 pip stop loss. Okay, that's 1 to 5 right there. That's what I like. Again, a little higher risk. Might have been stopped out, sometimes 10 or 11. And what I'll do is I'll put a price alert. Again, that's just how I trade. Okay, what can I say? I'm high risk. But at the end of the day, this was the whole thing. That's the whole pattern right there. Let me bring the ATR candle size indicator back up. So there we go. Blue candle below prior week low. Price raises the low, close inside of it on the 5-minute chart. Take profit middle of this range. Done. That is the whole trading system in a nutshell. It takes time, but it can print if you're, patient enough to wait for the setups to play out. All right. So that's the whole thing. So let's wrap this up. In conclusion, my favorite part. Okay, it's simple and repeatable patterns that can keep you paid. Okay, keep your losses small. It's always possible you could be trading against the overall trend. Your risk management is still number one. So like I said, I can take small losses, but because I'm always aiming for big gains, but that's just me. No trade should be held more than 2 days. That's just my preference. Okay. Maybe up to 3, but that's about it. Like that prior example I showed you. Okay, stop outs are possible, and the move may come later on, like I showed you as well. That example on, I forget which pair it was, but it took a few days for it to play out. So simply just set a price alert if that happens, in case price hits your level of interest again. Okay, but it's really about just mapping the trade out. Map what you want to see, and then don't press any buttons until you see what you want to see play out. Until it does, you don't do anything. So we'll check on Euro Pound just as a closing. And see, this one right here took a few days to play out. It looks like it's going. And whether or not I didn't get to take this one because, like I said, I got most of my capital tied up in a euro. No, I'm sorry, pound dollar. But this is the trade right here playing out in real time. But it took a couple days to show out, so it may or may not pay out. I don't know. But see, it did the same thing like that other one I just showed you. This was the range on Tuesday, but it's not starting to hopefully pay out until Friday. So you'll have that. But it could be a straight drop for the rest of the day or just may consolidate. We don't know. I don't know what price is going to do. So that's why you just control your risk in the meantime. So that's the deep study on the ATR candle range momentum trade. Ideally, hopefully, we'll just catch this momentum to the downside and see if it can finish out at the middle of the range. And if it doesn't, then we catch the next one. But as well, you know what? As one last bonus, let's see if we can see any others. So for next week, just in terms of forecasting, I'll be watching this next week. We have a yellow candle above prior week high. I'm watching that for a possible short. Nothing there, so nothing there, nothing there. We had a blue earlier below the prior week low. And see how that one, yeah, I think I traded this. Yeah, I took this. Yeah, I made money on that one. That's the one that played out this week, but it took a couple days to play out. That was the range low. Let me make this bigger. Yeah, once price closed back inside the range, momentum, bang, all the way up. Okay, they're there. You just got to look for them. Yeah, I'm glad this is here. Sometimes price won't go up to the high again. It is what it is. I don't have an entry model based on this. I don't. I like to see price raid the high and then come back down. Sometimes it'll just come back down without doing that. It is what it is. Same thing here. Okay, so if you want to make up something for that, feel free. I don't care to trade that. See, nothing there. Looking for just yellows and blue candles. Nothing there. Nothing there. Nothing there. Nothing there. Okay, there was a blue candle here. I did take this, but price did come back. I got the profit in London before it started to retrace, but I'll show you this real quick just so I can, show you how I did take it and then got out. Thankfully, I got out early London because I took it last night. So let me see. Okay. Yeah, I had my price alert somewhere in here. Yeah, it was around midnight, I think. Yeah, I took it like right here. Yeah, see, there you go. That's 1 to 5 right there with a 10 pip stop loss. Bang. I got out in the 4 o'clock hour. I was satisfied. But then as you can see, price, I didn't know price was going to do this. So I'm thankful that I got out when I did. So sometimes if you just want to do a set pip goal, that's fine, because if I was going for the middle of the range, I would have lost this trade. Or maybe broke even. Okay, it didn't stay outside the range, it broke right back out. So thank the most high I got out. Okay, so there you go. Let me bring the indicator back up. Nothing there. But this is how you forecast your trades. If there's no, this is just a tool. Okay, you got a couple of blues here, but notice this range has not been rated, so there's no trade there for me for now. Nothing there. Okay, we have another range we can keep our eye on because here's the prior week high. I was watching this, but I took a loss on this. Matter of fact, I lost the trade here. It may still play out because it's rated this high and it closed back inside of that. So I'll keep an eye on that one for next week. Nothing there. You can keep an eye on this. Here's a yellow candle above the prior week high, but this high here has not been rated, so we can watch that. This trade here did already no. Well, yeah, okay. I showed you euro pound, but this one could be working out right now. There's the high, so it's already on its way down, so that could play out. I'm not going to take it, but it's there. This one here already pretty much played. It's kind of consolidating, nothing really to do on that one. But this one right here would have been a decent trade. Nothing there. Nothing there. Nothing there. And we already went over euro pound. Okay, so that's it. That's the deep study. That's how you forecast and look at pairs in the future and how you take the trades once they play out. So I hope you got some value out of this. I appreciate you watching. I appreciate your time and attention. I appreciate all the subscriptions. I appreciate all the comments. I do try to reply to every single one of them. And I just thank you guys. So just be sure to manage your risk, stay consistent, and you will make your trading goals come true and come to fruition. So thank you again. Thanks for watching. Have a great rest of your day.